Okay, let's look at Bitcoin today and see what's going on. I haven't looked at the charts at all until now. So okay, let's look at Bitcoin. What's that today? That's a bit of a, let's see what's going on. Echo. Have a look. Okay, I muted that. All right, there we go. At least the volume is working. All right, let's have a look and see what things are saying to us. I usually look at the daily candles first because I haven't looked since last night, and so yesterday we ended with a green doji. It took the liquidity from the top of this candle, and this candle. So it's taken the liquidity from these three candles. It's matched the height of this one almost slightly underneath. And then the close was here, and it just basically sold off straight from close. And it sold off all the way down. It's taken the liquidity from these two candles. It's come right back up. So from the daily open, it's sold off all the way down, taking the liquidity from these two lows. It's come right back up. Generally speaking, these green dojis in the wick of the daily, of this expanding daily candle, are bullish continuation. These are bullish continuation candles, but they are within the range. So this daily expanding candle, which closed above this daily high with this wick, that is bullish because it closes above the previous levels. Basically, it means that these wicks are no longer held as resistant, and so therefore the theory is that the top of these wicks will be acting as support, which, as you can see, the price comes down and it gets brought back up. So the candles are basically telling us that we're on top of support. We're holding support. That's what the candles are saying. Right now, we're in the top of this this range of this expanding green candle inside of the wick, and we're holding support. So we've held support for 1-2 days. We've taken the liquidity from the top and now from the bottom, and we're still within this range. So let me just draw out the range. Once I do this, all this stuff is going to come back. So let me just clear it out. I'll hide that. I'll keep this. I've actually got down to the SFP line. I have to have a look at that and see. We closed yesterday. We closed up inside of the weekly wick. I'll be interested to see if tomorrow's close is within the weekly wick, because if it is, that's quite a bullish indication. But I'm going to hide it for now. Just rename it so that when I go back to it, I will forget. Question: how can I rename it? I have to go here and rename it. Is it there? Oh, it must be inside there. Okay, that's fine. Right, let's just get rid of it like that. That's fine. I'm going to zoom in to the 12-hour chart. I'm going to zoom in a bit more to the 4-hour chart. I'm going to pull this volume range pull to cover all the rest of these candles to see where the volume is actually landing. Let me see the difference. See that? No difference. The volume area high is a bit lower. The volume area low is a little bit higher, but no difference really in terms of the range and the volume. So you see that we were kind of trading underneath this point of control. This candle, what time did that happen? 4 AM. Oh, I wasn't awake. I was looking for a swing failure of this low here, but you could have, anyone could have taken this trade. If you would have seen this low taken, this low taken, this low taken with this kind of candle, that's a bullish reversal. Reason why is because it closed back above there. So it went down, took the lows, took the liquidity, it closed back above the previous candle low. That's a sign of reversal. A little bit of increasing volume. It didn't close back into the value area low. That doesn't matter because it closed within, above the previous low of these two candles. So if I was awake and I was looking to take a trade, I probably would have taken that trade. Just looking at this, just by taking the lows. You don't actually have to take the SFP here because that candle is the SFP. You would have to, if you took that trade though, you would, your actual invalidation would have had to have been the low down here, because there's no way that you would have expected this to happen. That would have been an invalidation. That would be wrong behavior. But it didn't do that. It went up to the point of control, came back down to the value area low. That was also a nice entry because you're taking the liquidity from this candle, from the low here, you're back testing the value area low. That's why it shot up, because that's a back test of a support level, and at the same time you're taking liquidity from this candle. Does it take it lower? You have to zoom in to have a look. It's hard to tell. No, it doesn't. It's on the same level. It's on the same level. Doesn't matter. You can't get bearish when you see that because you're taking liquidity. You're closing back above the wick. If this red candle had closed underneath this green wick, okay, that would have been different, a different story. So every candle where it closes will tell you a different story. That you have to try and understand what it's trying to tell you, and it's all to do with the range of the candle, the liquidity that it takes from previous candles in the past, and also where it closes. And obviously where it closes is really important. So you see this red candle, it didn't close above the value area low, but because it closed above this previous candle, this previous green candle, and because it took the liquidity from these candles, then that is no longer a sell. That's no longer a sell. That's basically saying I've taken the liquidity and the price is back up here within the range. You know, when you take the liquidity and the price comes back, that's the balance, that's the equilibrium in the market. All of these people were stopped out. So what does that mean? Well, that's lower sellers. People who were stopped out here, here and here were market selling. So there was downward pressure, and yet the price closed back up there. So with all of this downward pressure, the price closed up. So that basically says there's no more downward pressure. The price is trading higher, therefore the price is reversing. That's the idea of what's happening. It looks like we're forming some kind of range. We've been in a range for a while now. We're above the point of control. That's good. That's bullish. The daily candle is forming this kind of red hammer. Red hammers in the highs are not good. But in the context of where we are and what's happened, it's not that bad at the moment because we're above the point of control. We've taken the liquidity from these lows. We're trading back above support. Yeah, so in the context of where we are and how this is forming, as long as we close above, basically within this wick, so let me just get rid of this. Let me hide it. So I think this daily wick is important. It looks important to me. I think that's quite an important range now. And mark it out. Daily wick. Daily wick. When you zoom in, you can see exactly how this this daily wick is behaving. You see the squareness of how the candles move underneath it and then go up above it. That's because these levels are important. You see it does the same thing here. Goes up above it. And then here it kind of ignores it a little bit, which can happen. It's not actually ignoring it. This is kind of, this whole bit here is indecision. Whereas this is more of an exhaustion of selling. Especially since we've taken the liquidity from these lows here. Yeah, I think as long as the daily, so when does the daily close? Yeah, as long as we close above this daily wick low, so that that daily candle close is above the wick, then we're basically at the bottom of the range. And I would expect to push up. And obviously when you put that range pull back in, put the range pull back in, got lots of fixed ranges, I don't know which one it is. There's a problem, oh, is that it? Yeah. Let me put that back in. You see, the daily wick low is the point of control. Surprise, surprise. They line up. So you didn't even need this range pull to see the range, to see the level of support or resistance. You know, the candles tell the story. That's what I've been saying. These tools will give you confirmation, but actually just by looking at higher time frame candles gives you all the information. This push up was a higher volume. We have reducing green volume, but this red volume is much lower. So that's actually, you want the volume to increase in consolidation, which is what we're doing now. After we've come and closed above this level here, now we want the volume to increase. We want a decreasing volume in consolidation. And that basically is saying that the sellers are diminishing, and once the sellers diminish, the price goes up. That's effectively what's happening. Yeah, I mean, could you long? Yeah, I mean, you could long. You could still long and put your invalidation underneath this low. It doesn't mean tomorrow. It really doesn't mean that the price can't. Let's just say we hypothetically close here somewhere. It doesn't mean the price can't come down and do that. Take the last bit of liquidity and do that. You know, you still like, I'm waiting for that low. You know, I might have taken that just because of the way it closed, but I wouldn't have taken it as it crossed, which is how you trade SFP swing failures. Usually as you trade a swing failure, as the price, if you've marked this level out, as the price comes down and it goes back up, as soon as it goes back up, you mark it buy. So you have a much lower entry once you hit the first point of resistance, which in this case would have been the point of control where the daily wick low is, you would take your first take profit, just in case the price does that, just in case. I wouldn't have taken that because that wasn't my trade plan. My trade plan from a few days ago was to SFP this low. I wanted to take out all of the liquidity. I wasn't content with just 1 or 2 or 3 candles. I wanted all the candles to be taken out. I wanted that to happen. So there is obviously going to be a lot of people who have longed here, leverage longed, and their stops are still on this last point of liquidity in this range. You kind of want to flush them out before you go up. That's what you want. That's why you often see flags form, you know, because the liquidity keeps on getting taken, but the price is still within. Usually they form where the price is still above some kind of significant support, and then the price ends up going up. Anyway, my long trade idea is still the same thing. It's still the same. I still want to take the liquidity. I will SFP the trade, that last low. That's what I'm looking for. I'm looking to take that. And obviously you have to wait for a reaction. You wouldn't just set limit orders there. And the reason why you don't set limit orders is what if the price just goes down? If you set a limit order, where's your invalidation? Is it here? Is it here? Is it here? Who knows? You need an invalidation. That's rule number 1. Where's my invalidation? Because of your trade idea. I think we have liquidity here. It is likely that the price just goes up, takes the liquidity, and comes back down. Looking for another move down. Try and take the final bit of liquidity. But then, you know, who knows? Like, when I'm looking at the daily, on a daily time frame, that's quite bullish, you know. Like, if we can close in that wick, red candle is the seller's opportunity to shine. You know, when you see a red candle, it means the sellers are in control. So the sellers are in control, and what have they done? Nothing. You know, they've been very pitiful. They've managed to take out liquidity, but the price is still in the range. You know, that's the green candles, the buyers are in control, because you buy lower and you close higher, and the sellers are in control. In red candles, you open higher and you close lower. You're a red candle, the sellers are in control. You know, if the sellers were powerful and more strong, this candle would close. It'd be like a long red candle closing underneath this wick. At the very least, underneath this wick. And maybe even underneath this daily wick low. You know, like if I saw this daily candle close here, I wouldn't take a long, because we've just closed underneath what I've identified as support. So I wouldn't take a long, because I wouldn't want a long into, the idea is that support flips into resistance. I wouldn't want a long into resistance. Yeah, even if the price does go up, I wouldn't long into resistance. You know, you have to long on support, and you also have to long on back-tested support, on reactive support. You don't just long on arbitrary support. So if you don't see a trade, don't take a trade. You have to plan the trade and look for, and there's millions of trades. You know, everyone is using infinity amount of indicators and stuff to create trades, but you know, you look at the charts and you come up with your own idea of what kind of trade you want to take, and it's basically the high probability trades that you look for. You can use indicators, like I sometimes use the SMA 50. In this case, look, it proved as support, you know, so some people would just use that as an indication for buying. On different time frames, it's quite powerful on the higher time frames. Look on the daily. See, look, we have this SMA 50 on the daily. It's powering up. That's pretty bullish. That's like bullish momentum, that moving average 50. If I was to put the ribbon, look at that. You have a perfect alignment of my moving averages. That's bullish momentum. I mean, even if the price was to come back down here, it's probably going to do that. Just because of the moving averages and the momentum of the market. The moving averages will pull the price back upwards. You know, that's how it works. You have to flatten these out. These have to kind of go flat. Kind of similar if you look back in time. They have to kind of go flat. When they go flat, the price can then fall, and then eventually it will use it will use them as resistance. Like on the way down, you saw how the price was coming back into kind of, and it was, the momentum was carrying it. It's an indication. You can't really trade it. You can't trade without an invalidation. The problem with moving averages is there's no invalidation. They don't give you invalidations. So it's just an indication of momentum, which is up. So you would look for longs. That's basically what's happening here. And then obviously there's smart money concepts algorithm recommended by CryptoSev. I already knew this. I can look at this visually, the candles, and tell you what's going on. But this just kind of puts it into writing. So look, it's saying weak high. Well, it is a weak high, I agree. But I didn't need this to tell me it was a weak high. It's telling you the buy zone is down here. See, that's where you want to buy. And in the future, if it comes back down, this would be a great area to buy. And this would be the better one. Take the liquidity down sometime in March. That would be a great place to buy. 34,000. Oh my god, that'd be amazing. You could buy down there. Simply because the momentum of the market is up now. So if the price suddenly crashes down, it's not going to zero. It's just going to get bought back up and whipped back up because of the momentum. Oh, David's messaging me. I hope he's watching. Let me just tell him I'm live trading. My phone is buzzing like crazy. Yeah, so you don't, I mean, I don't think, like, some people use indicators to trade. I think it's very difficult to use indicators to trade because you still, the principle, the concept of making a trade plan is you need an invalidation. And most of the time indicators don't give you invalidations. Invalidations are basically either maybe swing failure patterns or signs of strength with back-tested support, and then vice versa, swing failure patterns from the high with back-tested signs of weakness and back-tested resistance, and then you have pivots become your invalidations, you know, and without those kind of pivots to give you those invalidations, then it's very difficult to make a trade plan. And then obviously you need your take profit. And the first take profit is always into the first sign of resistance if you're longing, or support if you're shorting. We're in a range. Nothing really more to say. I think on the higher time frame, I think for now this is my trade plan. Shorting, yeah, I mean you could short that top level easily. You could do the other way around. You could take an SFP off that as soon as the price comes back underneath the daily high wick. you could short that as well, somewhere like that. That would work. Right back down, because the idea is this, and you have to concentrate on the idea. The idea is that right now in this range, people are forming biases. Some people are long for the moon, some people are short to hell, and they're taking positions. And right now in this range, this is the high and this is the low. See that? So obviously if you're going to short, that's where your invalidation is, and that's where your stops are going to be. If you're longing now, I mean, you might have your stop there, but realistically that's your stop. People are biased. So if the price does go up and stop out all of these people from all of this range, actually from here onwards, basically from when this pivot was put in onwards, so basically from this distance, and actually longs, it's from this candle onwards. So the longer, there's a lot more liquidity based on that idea because of the time that's passed. This pivot was put in much later than this pivot, so almost twice as much time has passed for this pivot here than this pivot. So naturally there's going to be a lot more long stops underneath this pivot, this low, than here. Yeah. The longer it goes, I mean, if we were to just continuously range, then they'd pretty much balance out, because then the distance wouldn't be too dissimilar. But right now you could argue that there's probably twice as many stops at least here than here, just simply because of the distance of the time that's passed from there to there. So anyway, the idea is this, that if the price goes up, stops out all of these shorts, so basically they're higher buyers, they're market buys, then you expect the price to squeeze up. That's the expectation. And you rebalance the market so that now the price is trading above this line. Now the new kind of range is up there somewhere, right? And if the price does go up, but then quickly comes back down somehow, then despite all of these market longs, which is all these shorts being stopped out, and also the breakout longs, you're looking at lower prices, which means that there wasn't enough buy power to push the price up to the next level, because you have a lot of market buys up there, and you add that with the breakout buys, and if the price is down here and not where it needs to be, which is up there, then there's no more market buys. That's it, because people don't market buy in the highs, they usually market buy at the lows. So that's it, it's exhausted, the market buys have exhausted, and so that's when you can take a short, because you've lost that level immediately, and so you can short it now, and that's your invalidation. Because the market buys are exhausted, there's no expectation to go back above and shoot up. You don't expect that. It can happen, but you don't expect it, and that's why you have created invalidation now. You can enter a short, and it's the same with the longs here. The price was to go down, all of a sudden everyone who's long after this level, after this candle onwards, their invalidation is here. So that's lower sellers, market sells. So when the price goes down here, not only do you have all of these people who are leveraged long selling, market selling, because they've been stopped out, plus you add that to the breakout shorts, you add that to all of the people who are selling because they're underwater and they just need to get out, and whatever other reason they think it's going to go to zero. And then if the price comes back up here, you've exhausted all the sellers. There's no more sellers now, and the price is trading above these levels. So then you can safely long, put your invalidation on the new low, and then you don't expect the price to continue, because that would require market shorts, that would require market sells to push the price down, and there aren't any. You've just exhausted the whole range of market sells when you've just SFP'd the last low pivot. I mean, that's the theory, and most of the time it works. So the best time to short is or long will be at these an SFP of this high and this low. So I think those are the trades really, until proven otherwise. But obviously, in the context of what's happening back here as well, you have to bear in mind that this is the best short up here. So even though this one you could take, it would be a scalp. This is the key short that you're looking for. This one, right back up there into 48, 44. I mean, it's really possible, because of the extended time that we haven't taken that level out. It's really possible that there's a heckload of shorts, stop orders up there for all of. So for everyone who's been shorting from that point to here, this whole range, that's where they've put their stop orders. And it's very possible that there's a lot of market buys up there, very possible, which is why if it goes up, it could squeeze up. And then you'll have a new range, and you wouldn't want the price to come back down. If it does, then you can short that. So this one, actually, just looking at it again, I don't know. This one would be a more of a scalp, probably. And then you'd be taking you'd probably be looking to take profit really quickly. You know, as quickly as possible, really. Don't know where. It'd be a scalp. This one would be the better one. This one up here. That would be the better one, and actually then you'll be looking at a much longer play, at the very least to these lows. You'll be looking at something like another kind of like that. You obviously wouldn't want the price to go back up there, because if it did that, you can early invalidate. You can just say, well, no, even though my invalidation's up there, I don't really want the price to come back above that level that we've come under. That wouldn't look good. More than likely, what you're expecting is over here now. More than likely, what you're expecting is something like this. You'd expect like some kind of push up, right back down to this, go up, hold as resistance, and continue down. And then obviously, in terms of the way the Fibonacci's work, that would be something like that back test of that level would probably land somewhere in the golden pocket. Obviously, the higher it went, the higher the golden pocket, and then it wouldn't line up. But the reality is, the higher we go in that squeeze, the less likely this is to happen. You kind of almost want to go to there, like a squeeze up to there, and then come back down. Yeah, and that would make sense, because then this would be the next level of support underneath this previous high, and then it would come back to back test before it continued. And obviously it doesn't have to go down suddenly, it could just range here a little bit and then continue down. Whatever, it could do whatever it wants. We're not trying to predict the future, we're just trying to react from how the price behaves at key areas of interest. That's all that we're trying to do. On the higher time frame, let me just get rid of these now. On the higher time frame, look, I like it. I mean, I think there's going to be a squeeze. Personally, I'm pretty bullish, and I think we're probably going to squeeze up. It just, you can't trade it without an actual trade plan. If you were to long now, you'd have to put your stop there, but you could easily get stopped out. You know, very easy for the price to come and take out this last bit of liquidity before it shoots up. Very easy for that to happen. That's the trade you want to be in. This is the trade you want to be in. The rest is gambling, really. Doesn't mean you can't make money from it, but you'd have to have an invalidation. I don't know if it's going to do that either, because actually what I'm looking and seeing is some kind of higher lows. So this one just comes down there, just makes a higher low. I mean, if it came back to test this level again, like there, you could put it at an invalidation there to try and trade up to the top. As long as the daily closed, is in that range, in that wick range, then that's probably, I think that's probably the next long based on candle theory. And you'll be trading up to there. You'll be looking for some kind of back test, and you'd have a really smaller and much smaller invalidation, because you want a good risk to reward ratio. So you'd be kind of like, as long as the daily closes above this daily wick low, so basically you don't want the price to close here by midnight. Doesn't really matter where it closes. Then you'd be looking for another pullback, a reaction. You can take the trade there, you put your validation there, you're trading it just for a back test of support to go up to the top of the range. If you get stopped out there, well, this is the problem. What do you do next? Then you'd be looking at either an SFP here, an SFP here, or an SFP here. So the only way to recover from that trade would be to take the SFP here, the SFP here, the SFP here, you know, like, and you may get stopped out another once, twice before you get the last one. But this first trade is very valid in context. The context is the daily candle. If you have a daily candle, look at it. Let's get that line now. Get rid of it. Closing somewhere above this daily wick low. I think a little back test of that daily wick low, then push up, another green candle all the way up. Maybe then we'll have to see how far it gets. Maybe it's just going to form another wide body doji or some kind of, you know, another range candle. Because we're within this wick now. Ultimately what you'd like is a daily close up there and a little back test on that wick to go up. That would be nice as well. So if we were to get a close without taking the liquidity up here, if we were to get a close up there on the next daily candle, that would be tomorrow. Get a little back test on this daily wick high to squeeze up then. But then we can have a look at that tomorrow. We don't have to look at that today. I don't know if I'm expecting some kind of breakout tomorrow. Maybe some kind of another green candle, come back, push back as far as possible, then kind of close as high as possible. If it can close above this candle, then I'll be very interested to taking a long in the first day of the week. You know, just have a little back test and go. But then let me have a look at the weekly time frame. I'll have a look at the 3 day as well. Let me see. Yeah, you see the 3 day, we're ranging in how many days left? Oh, that ends today. I mean, that's bullish, you know, because we've got a green candle potentially closing within the wick of that 3 day candle. So this daily wick low and this daily wick, that was also the 3 day wick low, wick high. See that? So that's even stronger. This range is even a stronger range. And then if you go into the weekly time frame, the daily would close just before the week wick, which I already had before but deleted. But yeah, I mean, if you close this week up here, like above this like weekly level, yeah, I mean, I think then it will probably back test and it will go. But if you close like where we are now, at the weekly level, which was where we are now, could just sell off again. That would be tomorrow though. You'd have to have a look at it tomorrow, because you wouldn't really expect, even though that looks bullish, you wouldn't expect people to market buy a green candle on a weekly close. It doesn't make sense. If we were to close somewhere here though, then you'd have limit orders here, so the price will come back down and then you could go up, as long as it reacted. The price will come back test and then go up. Otherwise it could just be another week. Next week could be another red week. It would be just being red, green, red. You know, just weekly consolidation. It can happen. It doesn't happen often, but it can happen. Can I see anywhere in the past where it's happened? Not really. Can't really see anywhere where it's happened like that. This is also dangerous too, you see. But this is on the beginning of like a big down move. Look, it's like a bear trap, a bull trap. It closed above that weekly level, but this candle went and took the liquidity there, and then it just dropped down to less than 50%. That would just mark it sold off. Alright, let's have a look at some other, quickly have a look at some other coins. Don't waste time. So I was in a prop S position, prop base. I closed it out today in profit, the whole lot. And I'll tell you why I closed out. Because of this candle, I didn't like it. Basically, I woke up and I saw the price down here into the point of control, and I was like, oh my god, that's really ugly. Like, what the hell? Why is, after these two bullish candles, and this bullish candle, it closed above that previous day high. That's bullish with a wick above it. You don't expect it to come back down. You expect it to, at the very least, form a doji here, or to go up. That would be bullish, and at least fill this wick. That would be bullish continuation. And I didn't expect it to immediately sell off, which is effectively what it did. I woke up and I was like, oh my god, this is terrible. So it was down here. Look, 4 AM. I woke up and it was 8 AM. It was down here. I was like, oh my god, that's not good. So in my mind I was thinking, okay, the first big pump I'm just going to exit in profit and then just look for a new trade. And so basically earlier on today I saw the price on the lower time frame. I saw the price pump there up to there, and then when I looked at the higher time frame I saw it come underneath, come up above this wick here, come underneath it, just back down, and so I just market sold. I market sold a whole bunch of prop S, like all of it really. And actually I was looking to sell and get out of prop S simply because of the bad news that's been hitting MEXC. So MEXC has been deleting people's funds. It's been basically cancelling people's accounts, and a lot of people have made money. Like they've got like $90,000 or $95,000 worth of funds in their MEXC account. And yesterday someone posted on Twitter where MEXC had actually cancelled their account, and that's not the first time it's happened. It's been happening a lot. And so I was like, with prop S, the only place that you can trade it at the moment is MEXC and on Pancake Swap, but on the Atos, whatever it's called, the Atos chain, whatever it's called, and which I've never used. So I was like, okay, forget that. Let me just get out of this. Wait for this kind of pullback, which I was expecting, because it moved so far down quickly. I was expecting some kind of relief rally before it, and I just sold into it. So this candle here, dare I say it, was my candle. I created this one here. I just sold into that. That was me. This red candle. I hate to admit it, but it would me look 156,000, basically 135,000 of that 130 was me. So I mean I could buy back now if I wanted at lower prices, but actually I'm probably just going to leave this token for now, because I want to hodl this, but I don't want to buy now for hodling. I'm seeing a pattern on the higher time frame here which I don't like, and I was looking at the pattern yesterday, and oh god, David says I'm commenting but you're aware, but you're not aware. Who's commenting on my stream? Alright, I'm gonna have to go in now. David's saying some people are commenting. What the hell? I should probably pay attention, right? Right. Apologies if people have commentated. Who is it? Oh, David Fazeldin. Noob Zors. Here's a shout out to David. David, do you like my picture? Ali was saying, I need to see you. So I'm in here in a dark room with this light on my face, so people can see me. I'm not a bot. I'm not AI. I wish I was AI. I'd be a pro trader. Joking, I am a pro trader. Let me make sure it's on mute, actually. Alright, I'm keeping an eye on my stream. So basically on prop S, there's a couple of things I saw which I didn't like yesterday. Just technically, I didn't like that this candle came into the golden pocket on the push up. I didn't like that. I like that it closed above the previous day high. I like that, but I didn't expect a crazy sell-off suddenly. You know, like I was expecting the price to come down a little bit slower. I didn't expect that. But the one thing that I've been noticing in this is I'm seeing a diamond pattern now on the higher time frame. I don't like diamond patterns, because when you come into it from the lows, you form this higher time frame diamond pattern. It's bearish. Let me show you. Let me get rid of these targets. Yeah, I won't get rid of the value. Actually, I'll get rid of it because I want to show you. Get rid of this fib pool. I don't know if you can see it, but it's kind of like there. You can see it. I don't think we've hit the low here yet though. See? This could come down here somewhere. Form like more of a diamond. I'm seeing this diamond pattern now on the daily time frame. Before I was seeing like a head and shoulders like that. But actually this diamond pattern looks worse for me. I don't like it at all. I need this pattern to somehow become invalidated. And we've seen that patterns like this get invalidated before, because what you're expecting now with this kind of pattern, you're making lower highs, you're making higher lows. Now we've got the pivots in. See that? We've got that in. Not expecting now the price to go up because we're making higher lows. Eventually what happens is you break down. Yeah. And you end up with this kind of long arm like that. But I don't know if this is going to happen. Like, I'm not predicting the future. I'm just telling you what I'm seeing, right? And I don't like it. And it could obviously do something else. But I don't want to be in that pattern regardless. I'm not like looking. It's just too risky. It's like 50. It's less than 50-50. And then I was looking at their Telegram group, and all right, let me show you actually, because I'm going onto their Telegram now. It's good to follow these when you're trading tokens. It's really good to go onto their Telegrams and see what they're saying, because you can get some kind of like hints sometimes and rumors about the future. And let me tell you what they were saying. I was looking at it earlier, and one of the administrators, what did he say? Let me try and find it. So first I saw some people talking about Mexi. I raised up Mexi yesterday in the prop base Telegram group and they ignored it. And now today some other people are raising it. So, you know, that kind of makes people nervous, because Propest is only on Mexi and Aptos. Aptos, that's the chain. So now they're talking about how to buy it because everyone is exiting Mexi. So that's really bad for Propest, because Mexi is the only major exchange that you can buy it on. So I think that's not a good sign for Propest. And then I think I saw him right, the admin right. Let me see, exchange. I have to search for it now. It's not easy to search on Telegram. Can I find it? Give me a second, I'm looking for it. I just want to read out what he said. You know, when people paste, they put these like memes, don't sell for McDonald's. I don't like that either. I don't like memes where people say don't sell. Well, then you start getting memes, new ATH coming. I hate that. That makes me nervous, actually, when people start doing that. To the moon. Whatever. ATH. Why can't I find it? Mexi. Wait, let me have a look. Search. This Telegram search is definitely not working. That sucks. Oh, that's why, because I'm not doing it right. Look at what this guy writes. Any instructions for someone looking to withdraw from Mexi to Pontem? I did mine months ago, but I've got a few people messaging me. asking how they import. Yeah, so this is like a thing now. Bad news is fucking freezing. No, this guy writes, I was referring to news about Mexi. Holding wallets. So they're using the Pontem app. It's an Aptos wallet to hold their Prop S. I think you can use Pancake Swap on the Aptos exchange chain to trade this. So that would be the way to do it. Okay, here it is. Any rumors about new listings, brothers and sisters? This guy, this is the prop-based manager, Bradley Russell. He writes, we're waiting to announce next listings. Not far off now. Not far off now. What does that mean? Not far off now. Not far off. Well, that doesn't mean soon. Not far. It means it's not far off. So it could be a week. It could be a few weeks. A few weeks is not far. Like I think in the time scale of things, not far doesn't mean this week. If it was this week, he would be saying very soon or soon, yeah, or in the next few days. That would be soon. The fact that he's saying not far, he's saying it's not far away, but it's not far. So it's not far away. It's not far. Far could be like a few months away. That's quite far. Not far is basically saying far away, but not that far. So I think a month is not far. Maybe 6 weeks, maybe 2 months, you know, like I think not far is not soon. That's the problem with not far. Not far means not soon. And that's my trouble. When you've got the admin saying not far and then you're forming this kind of higher time frame diamond pattern, which also looks like a head and shoulders, I think you want this to play out one way or the other. I mean, just to be safe, like you want to buy, I've got this channel drawn, you want the price to break and you want to buy down here, and that's a big discount. That's like a 59% discount. I mean, you could just scale in, for sure, but the reality is that you're forming this market structure now. And I hit the range and pull that back in. Okay, we're still above point of control, but look what we're doing now. Look, this is what I don't. We're back testing this point of control. We hit it like once, twice, 3 times, almost 4 times, 5 times now. 5 times. That's too much. You see, if this was bullish, you wouldn't be able to touch that more than twice, and then it would be back into the value area high. Do you know what I mean? Like, that's what you're looking at. If this was bullish, you wouldn't be able to. You wouldn't be back at the point of control. So it's still holding a support, but I just think I'd want to see it. I want to see us lose it, and then I want to see us either swing failure these lows, so short, but then you're underneath this channel, but you never know. That could be that looks like a bit of a harmonic, actually, if it did that. David's the best of harmonics. He has to look at these and tell me what that's looking like, but it kind of looks like a bat. I'm not going to draw it because I suck, but basically it's like this, isn't it? It came down like that. Then you could trade that maybe to halfway. Maybe a trade to halfway. Maybe if it broke down and trade it back up to this I don't know, it's hard to know what it's going to do, but actually, I mean, if this diamond pattern, see, that would then be invalidating the diamond pattern, because if this diamond pattern plays out, yeah, the way I think it could, then you're actually explaining it. Once you break it, you're actually expecting a really nice sell-off. to create this kind of, to fill this. Probably as high as the pattern itself. So I think this lower channel would be a good target for that. And then that would be a good place to accumulate. But if it doesn't do that, then maybe what you'd be seeing is what we saw before on INJ with these patterns, is you kind of break the pattern. You kind of break it, you go down, and you just go back up. And you kind of back in the range, and then it just starts to go up. So then it's no longer the pattern becomes invalidated, because with the pattern you want it to go down, continuation. How would you know if this was invalidated before it actually got past the point of control again? I don't know if you could. It'd be very difficult, you know. You probably want it to, whatever happens, to get back above. Once you lose this point of control, you do want it to you do want the price to get back above it if it drops down before you buy again, because it's just major resistance now. And if you look at the volume, you see, you can just see it, there's a lot of volume. That's basically on this asset, that's where all the volume is now. So the minute we lose the point of control, this becomes, for me, it becomes very bearish. And actually what you want to see is, you want to see this volume, this to become the point of control where you had previous volume. I would like to see this become the point of control. That would be your buy. Actually, this channel is just made up. It might not even exist. I just made that up. It could actually be much wider. So maybe if this is the point of control, where this wick low is, there, that's the point of control. You see that wick low? It's kind of the point of control. The future point of control could be there, and then it comes down and hits this channel. I don't know, just making this up. Maybe this channel doesn't exist, you know, like, it's very arbitrary what I'm doing right now. Just trying to make, I like that, so that maybe that's good actually. So we kind of pierced this channel to that point, yeah. So actually the channel midpoint is much higher. I think once we lose that point of control, it's going to be really bearish. And obviously this diamond idea is completely invalidated if we start making new highs. Would I buy back in at the highs? No, probably not. Probably not. I would wait for, I'd probably then what I would do with this token is I'll wait for the next major pullback, or a real sign of strength. What would be a sign of strength here? But we are on the point of control. I mean, so it is a good place to buy, technically. But I just don't like that we've tested it so many times. And we're making higher lows. I'm sorry, lower highs. See, lower high, lower higher. I don't like that. It looks like we're making lower highs. Why is the price making lower highs? Why didn't this go higher? Yeah. I can't really see a trade there right now, but I'm out at the moment, so we'll see. And as long as you're out with profit, then who cares? That's it. You know, like, just look to the next trade. Alright, next one. So I'm also in floki. Oh god, that's not looking great either. What the hell? I've literally not looked at these. I have to see if anyone's chatting. Oh, my screen went off and I couldn't see. Or you disappeared. Alright, that's fine. I've got about 15 minutes to go. Well, I don't mind floki so much. I'm still quite bullish on this because on the higher time frame we've got this lower level here. So it looks like we've made a higher low. We have to now just go up and make a higher high. We had like a bullish reversal on these three candles. It closed higher. I think as long as we don't, I don't mind that this red candle has closed, all of the price has been lost. That could be your take profit candle. That could be your expansion. That could take profit. It's an inside candle. It's not a bearish reversal yet. I think the minute it becomes a bearish reversal is, I mean, ideally, if it closes like above this, top of this candle wick, then that's okay, huh? That's okay. It's just like a back test. And then maybe the next one will go up. If it closes lower than the candle itself, then I'll probably be looking to sell out of the, like this, to scale out of the next candle. For the next rise up, like 50% up, and then see what happens. So there's a few kind of, I'm just waiting for these daily candles to print. Yeah, that was, I mean, look, on the 12-hour chart, that is a reversal. But I don't like that gap. There's a little gap there. Oh, this is on MEXC. That's probably why. I'm probably going to have to go to a higher volume exchange. See, that was a big sell. But it was a low volume sell. You have a high volume, low volume. See the price, the green, you got increasing volume. I still think it's alright. I still think it's okay. It still looks okay. I have to see how this daily closes, how this next 12 hours close. These 4 hours are quite good. This 4 hours just closed above this wick. This one, we have to see how this one closes. That one closed underneath this wick, but as long as, like on the 4 hour time frame, if you're looking at this a little bit more closely, on the 4 hour time frame, you don't want to close the 4 hour close underneath that line. I think if that happens, that's not positive. Yeah. So you just, if this goes up, yeah, that'll be fine. I think the minute you start, you have a close underneath there on the 4 hour, then you could do that. So it's good to look at the way these candles close and the levels of support and resistance to see how they're going to move and behave. I think this red candle is a take profit, and it's a low volume take profit as well. So basically there was no volume on the way down. You'd expect, because it moved such a far distance with no volume or low volume, you'd expect the price to try and get back up. If I was to do a range pool, let's have a look. Yeah, you see, look at that. There's no volume. There's no volume on the way down. Look at all these gaps. These gaps. So basically, what does that mean? That means that someone sold market and because there was no limit orders, the price slipped down really fast, above the amount that was needed to push the price down. And now you've from this downwards move, you formed a point of control here, which is like an SR flip. So I think it's looking okay at the moment still, and I think I would want to see maybe this volume to clean up before maybe deciding. Okay. I'm gonna have to wrap up actually. I wanted to look at some other things. I'm gonna have time because I have to go. Okay. Oh, travel is going up. Oh my god, look at that. Right, I'm gonna have to come back later to this to check these things out. I was gonna have a look at the total market cap. I won't have time. Alright, never mind. Until next time.